So you're all taking part in Young Enterprise Scotland, which is why you're all here, which is fantastic programme to get involved with. So basically this session, as I said, we're going to look at an introduction to some of the company finances that you're going to have to know about. And what I would say is that everybody in the team should know about the finances, even though if you're not the person who's particularly dealing with it, because I know you all kind of have your roles and things like that within your teams. However, everyone should be really aware of it. It is an underlying concept of running a business. Why do you run a business? Well, you run a business to make money, perhaps. Or if it's a charity, well, why do you run a charity? To help people. And to help people or donate something or do something, you need to make money to do that. So finances is something that underlies and is the heart of every business, really, regardless of what it does. We need to be able to manage the money. So everyone should really be aware of it, regardless of if you're in the finance department or not. So that's why it's really important that everyone kind of is aware of it. But obviously, really, really, really important for the person who is doing the accounts and actually recording the finances to know there. So to start with, we're going to have a little introduction, and we're going to kind of be splitting our lecture into four different was it 4 areas? Yeah, 4 areas. So we're going to look firstly at the terminology that you are going to hear in relation to accounting. And I'll be pausing for questions quite a lot, and we do have the use of the chat box function in Teams as well, which is absolutely fantastic. My colleague Amy will be monitoring that. So in the chat box, you can pop down any questions that you like while I'm talking, and Amy will be able to answer those. I'll also pause for questions at certain points, and please feel free to do that. Obviously, the chat box, you don't need to come on microphone, but you're more than welcome to ask questions over the microphone as well. So please make sure that you do that. I want to make sure that everyone understands as we go through. We'll look at some of the general principles of accounting that you're going to think about, and those are kind of overarching principles which apply to accounting that we should always bear in mind as we are preparing our finances and prepare our financial statements, which basically show how well or badly our company has done during a certain time frame. We're then going to think about controls and processes. Now we're going to think about them in further detail, but basically, what do we need to have in place in our business to make sure that we run it successfully, to make sure that we run it efficiently? We want to try and avoid errors happening. We want to try and avoid things going wrong. So in order to do that, we're going to put some controls and processes in place. And finally, we're going to have a think about record keeping. So we're going to think about, well, what records do we need to keep as a business and why do we need to do that? And what are the kind of most important ones? So you want to be writing things down, whether it's electronically. Businesses might have a big complex accounting system that everything's automatic and things are scanned and automatically done. But for yes, and for kind of smaller businesses, it'll be done more manually. So that's what we'll be focusing on. So is there any questions so far just based on that little introduction? I'm going to take silence as golden. Perfect. And there's my little cache there for you. Just nice little diagram. Keep it nice and interactive. So to start with, I'm just going to give a little bit of an introduction to who are ICAS. So I told you a little bit about myself, that I'm a lecturer with ICAS. As I said, predominantly financial reporting, financial accounting. I also lecture in auditing and business acumen. I studied with ICAS and became a chartered accountant, and I did that after studying accounting and finance at Glasgow University. And before that, I was at school, and I did some accounting at school as well. So I've really, really enjoyed it kind of throughout my career. I've also taken place in the YES before by sort of these, and I think it's an absolutely fantastic program. So I think it's great that you guys are getting involved and that ICAS are able to get involved as well, and you get to know a little bit more about us as you might want to get involved with ICAS later on in your career. So we were established in 1854, so many, many, many years ago, and we're a global professional body. So what does ICAS stand for? Well, it's the Institute of Chartered Accountants for Scotland. We have over 23,000 members and they are worldwide. So we've got a huge network of chartered accountants that are members. And basically what we do is we provide training to achieve that chartered status. Now, studying with ICAS is the only place that you'll be able to have CA after your name, chartered accountant. Elsewhere, it would be different letters, but the only place CA is ICAS. So we provide that training for people. So the first thing we're going to do then is we're going to have a little bit of our interactivity coming in. Now, what I want you to do is I want you to scan this QR code using your iPhone or Android. Now, Android, I said, I think you need an app. I don't know, Amy, if you can get, if there's a code. And basically, this takes you to a place called menti.com. Okay, mentimeter.com. And what you're going to do is I want you to pop in some words about what words remind you of an accountant. And it's going to create a nice words cloud. And I'm going to be able to show that on the screen and we can have a think about what you guys think reminds you of an accountant. So you're going to pop 3 words into Mentimeter of what you think is an accountant. So as I said, you can use your camera to scan the QR code, or Amy has put a link in the chat box. You can go to menti.com and use the code as, let me pop it up here, 66 20 42 5. So let me just write that up. So 66, my memory is shocking today, 20 42 5.
Sorry, Heather. I don't know if we're maybe just on the Menti. It's the next slide that's showing up just when I'm scanning the QR code. So give me 2 seconds to see if I can fix that.
Technology, okay.
Technology, who loves it? We literally checked this about 15 minutes ago.
We've tested it and everything.
Give me 2 seconds.
Not a problem. Okay, guys, hold fire, but at least you're getting to practice your QR scanning. I'll just wait a couple of seconds. So have a think about your 3 words so you're ready to enter them in when you have a think. If we can't get it to work, I'll get you to pop them in the chat box, but hopefully we can get it to work. I don't know, it just needs to click set on something for us.
Maybe have a go now. If someone could pop on.
I've got it here. So the page, it's marked here. So I got to the page, it just said to refresh because you changed the slide. So the first slide it showed me is one that asked what words remind you of an accountant, and there's 3.
Perfect. Yeah, that's exactly what we need
as well now. Yep.
So that,
if everyone can do that, that would be great. And then hopefully I'll see the results coming in, and then I can share what word cloud we create. Oh, they're coming in now. We've got the results coming in. Exciting. I'll be able to show this. I could probably show it just now and show you it live actually, but you'll just need to bear with me so I can show you it. Share the right screen. There we go. So this is our live word cloud. So hopefully we'll get some more coming in. Spreadsheets, yeah, lots of spreadsheets. I know from being one. Planning, maths to some extent, but not complicated maths, I wouldn't say by any way, shape or form. Organising, logic, absolutely. See if we've got any coming in. Oh, perfect. Beans, I'm not sure where the beans coming in from, but okay. If anyone wants to explain beans, that's great. Finance, academic, charismatic. I know lots of charismatic accountants, actually. We're not all like the stereotype. If you ask an accountant an interesting fact about themselves, I'm sure you'll be surprised. Manage money, academic pivot tables, absolutely. I've used lots of pivot tables in my time. Knowledge, financial records, spreadsheets coming through is the main one there. Understanding, maths again. Give another minute or so. Create financial records calculator. Yeah, I see that all the time. I use my calculator. Thorough, absolutely. Plan for the future, 100%. Budgeting and planning for cash budgeting coming in there. Managing money, so those are kind of tying in there. Money in there. Detailed, organisation, absolutely. Let's kind of one more time. Yeah. Okay, so money, finance, spreadsheets, organising being the main ones coming in there. That's really, really interesting. So
We're back on here, I guess, Heather, that's us.
Perfect, thank you. Okay, so following on from that, well, let's have a think about this slide. So what is important? Well, communicate an accountant. Not only we should be communicating with potentially clients, because you might be an accountant for a client, or if you're an accountant for, let's say, within your YES program, if you're doing that accountant role, you need to be able to communicate to everyone else within your project, within your company. You need to be able to communicate to the people that are buying things in and be like, well, can we afford that? Yes or no? You need to be able to communicate to the people that are dealing with the making of the things and saying, well, but how much is this costing? Or maybe actually we've got a bit more money, so maybe you could make this using this material, or you could add this onto the product. So communication is going to be key throughout the project and for accountants throughout companies as well. So that's going to be both verbally, written, emails, like actually speaking to people across suppliers, customers, and within the team as well itself. If you've got a team of accountants, you still need to be able to chat to each other. So that's really, really important. Planning, which came up in what you guys brought up in your Mentimeter there in your word cloud. If basically the phrase that I'm sure you've all heard before, if you plan to fail, you'll fail to plan, or fail to plan, plan to fail, that way round. Say the wrong way around, Heather, well done. So if you fail to plan, you better plan to fail. So that's really important as well. We want to be able to plan, and in order to achieve our goals. What is our goals? Well, maybe it's to make money. Well, if we want to make money, we're going to have to plan to do that. You're not just going to go out and just not keep records and not think about anything. How are you actually going to make that money? How are you going to make profit? So to do that, we need to make sure we plan to achieve our goals and our objectives. As I hinted at as well, it might be to do with a charity. So it might not necessarily be we're going to meet our objective of making £1 million, but it might be, well, we want to be able to plant 1 million trees, and in order to plant 1 million trees, we need to make X amount of money to do that. So it might be something that it might align to our goals that way, a little bit more indirectly, but still aligning to our goals. Teamwork as well. Teamwork is super important. We need to be able to work in a team. We need to be able to recognize that everyone contributes something in a different way. A key thing about teamwork, and especially with accountants, is you need different skills. We need to be able to work together, use everyone's strengths in order to be successful. Also, being creative. We need to be able to think creatively in order to meet our goals and our objectives, okay, and be able to manage our money objectively and creatively there. So that's really interesting compared to what you guys have all said in your word cloud. You did have a planning coming in there. I think, did we have teamwork? I'm not sure that we did. Lots of logical money spreadsheets. So lots of things to do with the planning and the being organised. But to be fair, the person who put charismatic, lols, well, you were right. You do need to be charismatic in a way. You need to be able to work with people within a team. It's part of your communication as well. So it's not just all about planning and spreadsheets. There are other elements to it there. And it's not just about recording numbers. It's thinking forward planning, forward thinking also about what's happened in the past. How do we interpret that? How do we improve upon that? And what does that mean for us? So examples of some CAs as well for you guys, some chartered accountants. So the Director of Finance for Pride London is a CA, and Non-Executive Director for the Australian Chamber Orchestra, so something different. The Financial Accountant for Harvey Nichols is a chartered accountant. And the Managing Director of Inspire Alpine, and that's a charity which is put in place to help close opportunities available to young people because of a wealth gap. So being an accountant can lead to lots of different avenues and lots of different companies. It's not just staring at spreadsheets all day, which people think in that stereotype of an accountant. It's really not that at all. There are spreadsheets involved to help us, but it's more about what do the numbers mean and how do we then act on that and how do we make our business successful. It's not just about 1 + 1 = 2 minus whatever, it's really about interpreting the numbers, using these skills and forward. So And lots of CAs don't even study accounts at university or college. You could study microbiology, history of art, chemistry, graphic design, physics, lots of different things. People study a multitude of things at university and end up being an accountant as well, because as I said, it's at the heart of every business. So it's a really good way to get to know a business inside out, because you need to talk to everyone within the business. So you're going to really get to speak to lots of people within the accountancy. So that's just a little bit background before we get started onto some of the terminology about what is an accountant and what's important to an accountant. Okay, so now what we're going to think about is we're going to think about the terminology that you might need to know for your finances, for your ICAS project. So what we're going to introduce here is we've got two statements coming in, and we have on the left here our profit and loss account, and we have on the right a balance sheet. So we're going to go down the profit and loss account first, and this is for Sarah's grocery. Now, for the profit and loss account, what this is doing is it's basically looking at all the money in and all the money out during the period, with some other accounting concepts, which I'll bring in a second, to get to what is our profit for this period. Now, usually that period is a year, but it could be 6 months, it could be 18 months, it could be 8 months, however long it is. So say your YES project, it would be profit and loss account for the, could be, I don't know how long you do it for, 6 months ended, and then whenever it ends. And what you're going to do in there is you're going to record everything which creates a profit that you might have made. So this account is basically our financial performance. How well have you done during the period? That's what it's telling you. How well have you done? So the first thing there in the red box is we have sales. So that's the amount that we've sold to customers. So how much of our product or our service, whatever it is that we're selling, how much of that monetary wise have we sold? So that's usually going to be, say you've sold, I don't know, 10 boxes of chocolates at £1 a box, your sales figure would be £10 because it's 10 boxes at £1 a box. What you then have underneath that is cost of sales. Now, cost of sales is your figure that you're going to, it's how much did it cost us as a business to be able to produce these items or the service that we've now sold. So say it was my box of chocolates. Say it cost me 50p to produce each box of chocolates and I've sold 10 of them. Well, it's going to be 10 times 50p, so it's going to be £5. Okay, so in that case, I would have sales of £10, cost of sales of £5, and my cost of sales is built up of the milk, the sugar, the flavouring, everything that goes into that cost of making that sale. The labour, the people that have actually put together the box and put the fancy ribbon on it and everything, that would all go in there as well. We then come down to the gross profit figure, and that gross profit is basically what's known as, sometimes you'll hear, our top line. And that's it, basically without considering everything else in the business, purely based on what we've sold and what we've made of those sales, how much it cost us to make them. What is our top line? How much have we made there? And that's known as our gross profit. So for my box of chocolates example, my gross profit would be £5. Okay, so that's the first thing, and that's what you might have only thought of before. You might have only thought of, well, money in being what I've sold, versus money out, what I've how much it cost me. But we have some accounting things we need to account for as well. And one of those is depreciation. Now, I don't expect that you guys will actually have to know too much about depreciation for your YES project, but basically what depreciation is it's an accounting charge that we put through our profit and loss account. And it says, well, what do we use in our business? Say we've got a machine and we use that machine. Well, every single year that we use the machine, we recognise that that machine is getting older. It's going to take more time to repair. It's getting worse. Time goes on. So we have this accounting thing that goes through here to recognise that, and it's part of a concept of accounting. We're going to recognise what's known as the depreciation charge. But I'm not going to worry too much about that because I don't think you really need to know much more about that. Wages and salaries is the next one down there. And wages and salaries is basically how much you are paying your staff. So in your YES project, it would be, well, if you guys staff were getting paid. So it would go through there. How much are you actually paying people? Insurance, so as that's another cost to the business, but that's not a cost of sales. It doesn't directly go in. It's still something that you've incurred. So it has to go through our account here. It has to take us to our position of how much money have we actually made. So things like insurance. Now, thinking about your YES project, what sort of things might you have going through there? Well, you might have advertising or leaflets or website costs, anything that you have incurred as part of your project that you think that results in the profit or loss being made for your project, okay? But it doesn't directly relate to it. So thinking about there, my chocolate example, although it said as grocery, well, they could sell chocolates. So the sales is selling my chocolates, and the cost of sales is basically everything that's gone into selling those chocolates. Okay, so that then takes us down to, I'm going to ignore some of the other things on here because you don't need to know about them. That then takes us down to this net profit position here. Oh, it's not wanting to let me highlight. In the net profit position, okay, it's not letting me highlight, that's fine. The net profit position is basically after all of my expenses in the business, well, how much profit have I made? So that's the kind of profit and loss account summary there. We then go on to the balance sheet on the right-hand side of this slide. And the balance sheet is basically a different statement, and it tells us about what is our financial position at a certain date. So it's a snapshot. So how much do we have in our business at that date? What is the position at that date? 2 seconds. Sorry, I've just it's all right. Okay, just thought I had a wee technical problem. We are absolutely fine. Okay, so basically, this is telling us about, well, what resources do we have as a business? How did we make our money? That's basically what the balance sheet does. It's everything that we have in our business and how did we then make our money? So we have what's known as fixed assets. Now, I don't expect you to know about you to have any of those, but fixed assets are basically things like land and buildings, plant and machinery. So anything that you have that is really long term, it's a big asset that you would use to create something. Okay, so the machinery that you would use to create my box of chocolates, my packing machine, or something that makes the boxes, or etc., or the actual building where I have my office, or the building, the warehouse where I have my machinery and where the chocolate gets made. So that would be an example there. Current assets is you're more likely going to have in your YES project, and that's going to be things like your inventories. Now, inventories, or otherwise known as stock, is basically everything that you have made that you haven't yet sold. Okay, so it's products that you have ready to sell but you haven't yet sold. So they're currently sitting there in your warehouse or in your office or in your classroom. So you've got boxes that I made, but I made 20 boxes, I sold 10, but I've got 10 left. So I've got 10 boxes of chocolate still sitting in my inventories or my stock. So we need to, it shows you that. So that's a resource of the business because we're going to be able to sell those on going forward. So at the 31st of March, being this date that we prepared the statement, I had 10 boxes of chocolates in my warehouse that I'm going to be able to sell on in the future. The next line down is what's known as trade debtors. And now this is basically people that owe us money. They're in debt to us. Okay, now how that comes about is that you would make a sale and you say, I'm going to sell you this box of chocolate, and I'm going to say that it's okay, you don't need to pay me right now. You can pay me later on. It's okay, you can pay me later on. You don't have the money on you right now, that's fine, pay me later on. So what happens then is that I've sold you a box of chocolates for £1 a box. But I say, oh, you've not got the money on you, that's fine, you can pay me later. So when you pay me later, because you've not paid me yet, I'm going to have to record this somewhere, record the fact that you're in debt to me, and that's going to be a future resource in terms of money into my business. So that's going to be a trade debtor. You're a debtor to me because you owe me money because you've not paid for your box of chocolates yet. So trade debtors that's exactly what that is. People that owe you money, they've bought something from you, but they haven't paid you yet. And then the third one in that list there is cash at bank and in hand. And that's basically your cash, your bank account. So you might not have an actual bank account, but you might have a little petty cash tin. You might have a tin of cash. And that's going to show at this date, so on the 31st of March, how much cash did the business have? Well, you'd take it out and you would all there, and that would tell you how much cash, and that's what shows you there. So that's a resource of the business. Again, think about it. That's cash that we're going to be able to use going forward. Okay. Then we have what's known as trade creditors. Now, this is a type of liability, and what that means is it's money that we owe. Now, trade creditors is something that we've bought, but we haven't paid for it. So, say that we needed milk to go into our chocolates, and I've gone to the milkman. They do still exist. They come around my street. I don't get it, but they do still exist. And I go to the milkman and say, could I have 3 bottles of milk, please? However, I don't have the money on me right now. Can I pay you later on? And he'll be like, yeah, you can pay me next week when I come around next week. So at this point in time, I have basically got these bottles of milk, but I haven't yet paid the money. So I need to show the fact that I owe that money. I owe it over to the milkman. I can't just ignore it. I can't just say, oh, well, I've not paid for it yet, so I just won't include it. I need to show that I'm going to pay out this money and I owe it to the milkman there. So that's what trade creditors are. Something that amounts that are due to be paid out. I have bought something and I haven't paid for it yet. The other thing that you guys might need to know about is capital drawings and retained profits. Now, capital introduced is basically money that you guys have put into the business. So it's like the owners of the business. Oh, someone got a question? I just heard some noise there. I don't know if everyone's on mute. So let me know if any problems. Okay, so capital introduced is money that need to go into the business that the owners have put in to basically say it. So in this example here, it's £12,000, but I'm guessing you don't have £12,000. So that's money that I've said as the owner, I'm going to put in to start up this business. So because of that, what we do is this comes at the very bottom of our balance sheet. Okay, it's just we couldn't fit it underneath. So this would come underneath. And this would basically say, it's showing to the people that look at the accounts, well, this money actually started up the business, and it's not really the business's money, it's capital. It was the owners of the business that put this money in. So it sits in this section here. Sorry, can everyone just make sure they're on mute? I'm getting quite a bit of feedback. Okay, I think we're okay now. Thank you so much. Just getting quite a bit of feedback there through my
Heather, sorry, I've got things, but I be turning on and off the mic. I don't know what's going on.
Yeah,
but
it just sounded like someone was talking there, but it's all right. I don't know what's happening.
I'll keep my eye on it, but there doesn't seem to be.
That's all right. Also, all right. It says that the meeting chat is muted. I don't know what that means. If we can still put it in the chat box. I don't know what that means. I've not seen that before. Amy, do you mind having a wee look and just check if the chat box is okay?
Yep, I'll have a wee look.
Thank you. Just didn't want anyone not be able to ask any questions. Perfect. So that's capital introduced. Then what you have is drawings. Now, this is basically where owners take money out of the business because people have a business to make money. So if you're the owner, so you guys, if you're the owners of your Yes project, of your little business, and you're taking money out, that's known as drawings. So it shows the fact that you've put money in, you've then taken money out because it's your business and you can take money out. So that's known as drawings, and that might be to pay some bills or just to kind of take some money out. It's your business, so you could do that. And then what we have underneath that is retained profits. Now, what that is showing us is every single year, some of it will get used, some of it won't. And the bit that doesn't get used is that net profit. And every single year, that net profit is going to get put through into a big money pot. That's the way I think about it. So every year I make money and I make money and I make money. And every single year I put it into a big honey pot. And my honey pot builds up and builds up and builds up. And that's what's known as retained profits. So it's the money that's basically left in the business after we've paid the expenses, after people have taken money out. We've paid all our expenses, we've paid all our wages. What money is left, we put it into this money pot going forward. And that is what's known as retained profits. Okay, so that's a bit of a whistle-stop tour of the profit and loss account and balance sheet, and that represented by section, as I said, that is showing us how the company is basically financed. So it's the money being put in by the owners, less the money they've taken out that year, and money that we've made in our big honey pot. So just at this point, I'm just going to pause. Does anyone have any kind of big questions that they would like to ask on this part? You might need to go away and have a little think about it. It's quite a lot of terminology coming in, but if you've got any questions. Okay. I'll take silence as golden again. Perfect. We'll just look through a few other examples then. So before I do, I'd quite like to get a little bit of contribution. So I gave you quite a lot of examples. So let me just go back, but let's have a think. So what sort of things do you think could go through your expenses in your statement of profit and loss? So that would come in under your gross profit here, some of the other expenses. Is there any other expenses that you think you might incur within your Yes project? You can pop it up in the chat box if you've got anything that you can think about. So I gave you some examples. Wages, insurance, anything else you can think about?
Got raw goods.
Raw goods. So raw goods, a good one. So that one's a little bit more complicated. Now your raw goods would go into making your product. So that would go into your cost of sales. Yeah. So that's a really good example, but that would go into your cost of sales figure. So absolutely well done. What about any other expenses that you've got to do with your business? Think about everything money-wise you would need to pay out.
For our business, we need to create an app, so that would be something that I would have to put out money for.
Yep, absolutely. That's absolutely correct. You would have like kind of expenses to do with creating that. Absolutely. Stationery, spot on. Registration fees, absolutely. Great examples coming through here, guys. Anyone get any advertising expenses like making leaflets or online ads or anything like that, like Facebook advertising, Instagram advertising? That would all come through as well. Perfect. Brilliant ideas. Now, does anyone have any, well, you should do at the moment if you're not selling. So do you have any assets? Do you have any stock sitting there that's currently there? Now, if you've got stock, you'll have that sitting there at the moment, and then it would get sold on. But what you're going to have is at the end of the period, if anything you've not sold, it should be sitting in inventories or stock. And I don't know if this applies, but I don't know if anyone's actually sold anything on credit, i.e. you've sold something to someone and they've not paid yet, but maybe if they haven't paid yet, then you would have a debtor. Profit going to the retailer of your product. Yes, absolutely. So it depends how it would work. If you're having to actually pay it over, it might come through as an expense, like a kind of a fee, or it might instead just be deducted as part of your cost of sales. It might come in there. It depends on the actual agreement itself. But that's absolutely a great idea. I'll just go through some other examples then, for some categories, and sticking with the grocery store, although my grocery store sold chocolate in my example, and that just shows you that I'm a chocoholic. So there you go. So some examples then is we had the heat and light is another one, which is my little light bulb there. That is an example of an expense, and it will come under that administrative expenses category in our profit and loss statement, not cost of sales. And that's basically to run our building, we need to pay heat and light expenses, so we might have that. Another one, expenses wise, you might have is like a mobile phone bill as well, internet bill. If you're having to use your internet, if you're having to use your phone to run the business, that would be an expense that would go through there. An example of our assets that we saw there was our cash. Also, this little person here is cleaning away. Cleaning is another expense that could go through your profit and loss account if you're having to get your warehouse cleaned or your office cleaned or something. That would be it. Think about water coolers. That's an expense. Also, let me think, any kind of petrol expense, reimbursement expense, public transport reimbursement. If you've had to travel somewhere to get something, that would be an expense of your business. Thinking about that balance sheet then, thinking about that inventories or stock, depending on what you've heard. So that could be our grocery store, sticking with the groceries, that would be the fruit. So that would be all the fruit that they haven't yet sold. So that would be sitting in the boxes in the store, and that would be stock. When it gets sold, it would be removed from there, and you would record a sale and you would record a cost of sale. Also, well, we've got some paper bags. Now, what would the paper bags represent? Well, that would be part of our cost of sales because we're selling our fruit and vegetables in that paper bag. So that would represent a cost of actually making the sale, because we couldn't make the sale. Well, you probably could, but let's just argue that we couldn't make the sale without putting them in the paper bag to hand them over to the customer that bought them. So it would go in the paper bag, and that would be a cost of sale. My little diagram up here, my sales bags is meant to just represent income. So as I give the bag over to the customer and they give me the money, that's going to be a sale, and that's going to come through my profit and loss account as sales at the very top there. And then the little guy there, or the little girl, or whoever, little person, little stick man, carrying debt on their back. So that's an example there of it could be a debtor or it could be a creditor. I don't have enough information. Reminding you, a debtor, that is someone that owes you money. They are in debt to you. You have given them whatever it is and you've not got the money for it yet. So they've not paid you yet, so it's a debtor. It wouldn't sit in cash because you've not got the cash yet. Or maybe you've paid for something and you haven't actually paid for it yet. You've bought something and you haven't paid for it yet. So you've bought your materials and everything, but you said, I'll pay you next week. So if you've not paid them yet, it would go through our trade creditors. So that's a creditor. So examples coming in there. I through them, didn't realise it was as interactive as that. Sorry, guys. Any examples on this? I can see some questions in the chat box, which is great. So those have been answered. So any further questions so far? No. Okay. So now what I'm going to have a think about is some accounting principles, okay? And you don't need to worry too much about these guys, but it is going to inform how you account for things. So it's just to kind of introduce these to you. Now, prudence is the first one. Now, what prudence means is basically that we're very, very cautious. So when we're accounting for things, we should be cautious, and we should be making sure that when we have to use our judgment, that we're cautious with using that judgment. And so in everything that we do, is it held at the correct value? And more often than not, what prudence means is that if we're not sure about something and we've got two values, you'll always go with the lower one. You don't want to record too much. You want to be cautious. So always just being super, super cautious about things. So recording, if you've got the choice between two values, it's going to be the lower one more often than not. So we're not just going to assume or jump into things. We're going to challenge everything we think about, any judgments. Is it too good to be true? We're going to introduce some of that critical thinking, and what else? So let's give an example here. If we had a piece of material that we bought for £10, but we think that this piece of material could actually, the value's gone down, the market's completely crashed, and we could only sell it for £5. Well, what should we be recording it at? Well, actually, it's only worth £5 in the market. That's all we could go and sell it for, because the market's completely crashed. No one would ever pay £10 for it ever again. So we would record it at £5. And that is like the prudence concept. So it's all about being super duper cautious. I'm sorry, some delayed words coming up there. The next one we have is what's known as the dual effect. And this is where basically we have a double-sided system for recording our accounts. Now, it's basically, we have what's known as double entry bookkeeping, which we're not going to get into today. And basically, when we have a transaction, there is two sides to that transaction. So let's think about selling something. So we're selling my box of chocolates again, right? So the first side of that is I've sold a box of chocolates. So the first side of that is that I have sold it. So it is a sale. So it'll go through my profit and loss account as a sale. However, what have I done with that sale? Have I either received cash, or is the person owing me money? If I've received cash, the other side of that sale becomes cash. Okay, so I've sold something, so I've got a sale and I've received cash. So that's the two sides of my transaction. Or I've sold something, but they've said, oh, I forgot my money. Can I pay you next week? So they haven't paid me yet. So the other side of that is a debtor. They are in debt to me. So what I spoke about before. So that would be an example of a double-sided transaction. And both of those would need to be the same account. And what that amount, and what that would result in is that this balance sheet that we had, which I'm going to go back to, it's going to take me a while, back to balancing. Okay, so what happens in our balance sheet is you have assets, which includes our stock, people that owe us money, and our cash. We then have anything that we owe, our creditors, and that gets us all the way down to what's known as net assets. It's 18,045 in this example. That then gets financed over here in the represented section about, well, how much money do people put into the business? How much money did we take out as the owners? And how much money did we make? How much money is in our pot? And that balances through. And the reason that that balances is because of this dual effect. Because if you think about that sale, what happens? Well, the sale that I made goes into the sales. Okay, it'll also have cost of sales, but we'll end up at a net profit. So let's just take this simply. I've sold a box of chocolates, it'll go in my sales, and that'll feed into my net profit figure. The other side of that is that I received cash. So that would sit in my cash element. Okay. Now this profit, as I said, at the end of every year, we take our profit and we put it into our big honey pot. And that then feeds into retained profits. So that feeds into this retained profits of 7,045 here. And you can see in the little kind of big jagged diagram that our balance sheet balances. And the reason for that is because of that dual effect, because we had sales and we had cash. And the sales led through into the profit. So that there is an example of how that works. And I'm not going to go into further detail, but that's one of the key concepts. Let me just flick forward here. So basically, everything has an equal and opposite reaction. Okay, so every transaction is going to have two sides, and it's going to be equal and opposite on each side. So I sell my box of chocolates, I've got sales, and I've got cash being the money handed over at the same time. So thinking about, if you want to keep in your head to remind you, thinking about Sir Isaac Newton, third law, believe it is, for all you physicists out there. I'm sure you'll know more about it than me. It's been years ago since I studied my physics, but every action has an equal and opposite reaction. So thinking about that little diagram there, that's scaled. So it's going to be like a seesaw effect. So let's say we have to buy something. Well, what's going to happen? Well, say we've bought something in to sell it. Well, that'll go into our stock or our inventories. But what's happened is we've decreased our cash. So it's going to have a seesaw effect. So it's increased our stock because we've now got more chocolate sitting there, but I had to pay money out. So it's decreased my cash. So we've got a seesaw effect, this dual side coming in here. So every transaction has two sides to it. The next key concept we have is called matching. And basically, we need to spend money to make money. Okay, so what that means is that results in going through our profit and loss. So in order to make that sale, we have had our cost of sales, which we know about. I've told you, like the milk and the sugar and everything that goes into the chocolates. But also we had things like electricity during the year that we had to pay, my telephone bill during the year, my app cost during the year that I've had to pay. And I've had to do that in order to make those sales. So in order to do that, I need to record both. So it's very similar to dual effect, if you like, but it's matching. It's basically that in order to make those sales, I've had to incur these costs. So I'm going to match them off during the year and they're going to go into my profit and loss account. The next thing we need to think about is we're going to receipts and payments. We're going to record when our cash is received. However, we have what's known as the accrual accounting. And basically, what we're thinking about with accrual accounting is that we don't necessarily pay for it at the same time. So cash transactions are generally a little bit easier because you're just going to record everything when the cash is received. So when the money is paid out or paid in, if I'm buying something, I pay it out, it's going to be recorded and I'm going to record I've paid £5 for this, my cash out. Or money's in, I've sold chocolates for this, so I've received £10, so £10 in. However, we have what's known as accrual accounting. And what that does is it accounts for when things haven't been paid. So when people haven't yet paid us, or when we haven't yet paid people because we forgot our money or we've agreed with them that we'll pay them later or whatever it might be. So what we need to do is we need to make sure that we record the fact that we're going to receive this money later or we're going to pay this money later. So that is, we have our trade debtors or our trade creditors coming into it. Okay, so that's basically what I spoke about before, is kind of adding a little bit of a label to it, and it's the accrual accounting. So basically, even if you've not paid the cash yet, you need to record it. Okay, so that's basically, in simplest terms, some of our accrual accounting. So we need to recognise the fact that we've got an expense and we've not paid it yet. Okay, so you're still going to put through the expense in your profit and loss account. So let's say, okay, I have my telephone bill that's come in here. I haven't yet paid for it, but it relates to this year and it relates to all my sales that I've made. So through my profit and loss account, I'm going to have my telephone expense. However, I haven't yet paid the cash, so it's not going to decrease my cash, but I need to record a creditor for the fact that I'm going to owe them money in the future. But it does go through. We don't just forget about it. Just because we haven't paid it yet, we still need to record it. And that is what accrual accounting is. Okay, just checking the time, running a little bit behind, but that's okay. Looks like some stuff in the chat box, which is great. So everything okay? Any questions at the moment on mic, or are we okay? Okay, so the next little bit we're going to come to is what is a control. And a control is basically where we're going to try and stop something going wrong. We're going to try and put something in place to make sure that everything is efficient and nothing goes wrong. So an example of a control you might all have is a password on your phones, your lock, or your face recognition, or your thumbprint as a recognition. That's a control to stop someone getting into your phone and getting data or looking at things that you don't want them looking at, okay? Or getting phone numbers or access to your banking or whatever it might be. Another one, car in a garage at night if you want to, as a protective control for your car. Locking up your house is a control for your house. Okay, putting things away in a safe place. Again, a control to make sure of that. Making a checklist to make sure you don't forget something. That's a control. It's a control and a process to help basically make sure nothing goes wrong and make sure you do everything efficiently. So why do we have controls then? Well, I gave a few little hints. Well, we basically want to stop people stealing things. We want to stop fraud happening, so people basically taking money out of the business or doing something illegal. We want to make sure that we do this efficiently. So we want to do it as part of our planning. Good practice. We might also do it for insurance purposes and just really good practice. So some other types of controls then from the ones that I've looked at before, we've kind of got different categories. The first one there on the screen is authorization. Now that's basically where you're saying, as I said, like you're having to get permission to do something. So say you're sending money and someone in your Yes project, like I want to buy this for the business, you would have to go to the finance person or the leader or something, and you say, can I do this? And they say, yep, that's an example of authorization, usually done by signing a document to say, yep, that's fine. The next one then is review, and this is a kind of detective control sometimes, but it could be preventative before something happens. So say you're got a big list of expenses that you want to buy during the year, you're planning to buy this, 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 and this, and someone reviews it and they might spot a mistake. That's an example of a control. Or they might spot, oh, actually, do we actually need that? So no, we don't need that expense, so we'll save ourselves some money. So that comes through the review. So that's another example. The next one is physical controls. So that's again something like something being locked away safely, something the car in the garage, using also physical controls as padlocks, passwords, something in money in a safe, for example, as well. And the final one here is called segregation of duties. Now, what this does is it ensures that not one person has too much control. So if someone is in charge of setting up payments, they shouldn't be able to actually send the payments, perhaps. It would need someone else to actually do that. Basically, one person signs maybe for delivery, another person checks the delivery, another person reviews the invoices, and then another person will pay it. And by doing that, setting up different people throughout the process helps to stop any errors that are happening, catches any problems, and also limit any fraud. For example, let's say the same person did all of that. Let's say the same person signed for the delivery, checked the delivery, reviewed the invoices and paid it. Well, what they could do is they could steal it for themselves. They could be like, oh, I want to take this as a Christmas present and give it to my mum. And no one would be able to stop them. No one would have worked it out because no one else has done any checks. And they wouldn't, and they'd send the payment to themselves. But oh, but I could just send that payment to myself, a little bit of money for me. And basically that would what happens because there's no one else and there's no segregation of duties. That person could essentially, without being caught, perhaps, steal those goods and send the money to themselves. Okay, so it's a way of stopping fraud. It's also a way of making sure that any errors are caught as well or any kind of problems. So here's some examples on the slides of some controls in place. So here on the left-hand side, so thinking about, for example, ASOS, the place where you can buy clothes online, they would receive an order. So that would then go to the sales department. You would then fulfill that order and dispatch it. You would pack it with all the clothes that the person's order and send it out. And that would be done by the warehouse. But then what happens is, well, we need to actually make sure that they're going to pay for it. So finance are going to invoice the customer and the customer is going to pay, which will also come back to finance. However, if the customer decides, oh, well, I've ordered a size, this is my size small and a size medium because I didn't know what size medium's too big, so I'm going to return it. So then that'll come back to the warehouse. And then if they've returned some goods, then we'll need to give a refund. So finance are going to do that. So that's an example of segregation of duties. Different people are dealing with different parts of the process. And the other example there is for purchases. Someone places the order. Then the warehouse receives the goods. At that point, the invoice gets sent to finance. Finance pay for it. So again, splitting it up between the different people so that any errors are caught and also to stop any fraud. So I'm just going to keep going, guys, just in the interest of time. And finally, the last kind of bit we need to think about is record keeping. So we need to think about, well, why are records important? Well, why do we want to have them? We want to make sure we can control our stock. The last thing you want is, oh yeah, let's take an order for 10 boxes of chocolates, but you've only got 3 boxes of chocolate sitting there. So you wouldn't actually be able to meet that request. So you want to be careful with your stock. Similarly, I want to know how many sales have I made during the year. Well, unless I write it down, it would be really difficult to figure that out. Obviously, now you can use computers and automated systems to do this as well. We want to know about our cash. We want to know how much cash have we got in, how much cash have we paid out. So we want to make sure we're happy with that, because the last thing you want to do is say, yeah, go ahead and buy all that ingredients. And actually you can't pay for it because you've not got enough money in the bank. So that's really important as well. And also, who owes us money? Because why do we want to know that? Well, we want to be able to go and chase them. We want to say, you know, you said to me you'd pay me for that box of chocolates, but you haven't done it yet. So you're going to have to pay me. So you want to know who owes you money so you can then deal with it. You also want to think about, well, who do we owe money to? Again, you don't want to just forget about it because they're going to come barking at your door and knocking down your door and being like, guys, you owe us money, come on. So you want to know about that so that you can manage it well. So it's really, really important that we keep records for all of these different things, and then you can prepare your financial statements. So there's just a little example of a stock record. So for our grocery, we can see we've got apples and we've got apple pies, marmalade, poached pears. Oh, this sounds lovely for a fancy grocery. And you can see here, this is people that owe us money and the debtors. So for those people that have bought those things, we can see how long they've owed us money for. So they've owed us money for a month, for 2 months, for 3 months, over 3 months. And we'll be basically be phoning them up every day and saying, guys, you need to pay this. Creditors, that's people we owe money to. Again, keeping a record of when did we owe them the money. And then on the right hand side there is we have inventories, and that's our stock. So we've got apples, oranges and pears. We've got 150 apples. They cost us 60 pence per apple, so £90 total. Same for the oranges, same for the pears. So that's just some examples there of what you might be able to use. So just to finish off then, we're just going to finish off with some keywords that I'd like to leave you thinking about. So as I said, finance is at the absolute heart of every business. So you really need to know about the finance in order to work through the business. So teamwork, super important. Being able to communicate with the different departments. Having a passion for your business and making it work. That's all going to result in to do with finance as well. Being forward thinking. What do the numbers mean? Do I have cash there? Have I paid everyone? What are my sales looking like? Do I have enough money to fulfill all of this? And being creative. Okay, and most of all, your yes project, it should be fun. Okay, so have fun while you're doing it as well. So be creative and have fun. So I'll just pause just now for any questions at the end here. If anyone's got anything on mic.